Over the last 48 hours, I have had a lot of people coming to me and asking me, is the next Great Recession coming? Are we going to have a massive economic collapse in the United States of America, maybe worldwide in 2019, okay? And so what I wanted to do is I went ahead in the last 48 hours, I spent a ton of time looking at statistics prior to the Great Recession, okay? 2005 through 2007. If you don't know, the Great Recession hit in 2008 and it went throughout 2009, and it was just, devastation in the economy, in the U.S. economy. Okay, massive job losses, massive losses in the stock market, massive losses in real estate, everything across the board. So I went ahead and I have viewed a massive amount of statistics from prior to what's happening in the economy prior to the recession. Okay, and then I went ahead and I looked at today's numbers. All right, and I found I found some startling things in there, some startling similarities. In what we're doing today versus what was going on right prior to the recession. Okay, and I want to go through a lot of these different categories today and kind of take you through all this because it is a serious subject. We definitely got to talk about it. And whenever the stock market has a really bad week like it did last week, when a lot of volatility, the Dow drops 1,300 plus points in a 2-day span, a lot of people are like, do fund managers know something that we don't? Or are they getting out of their positions before we do? Do they know something we don't? Do the Illuminati, do they know something before we do? Like a lot of people wonder those type of things whenever they see a massive sell-off in the stock market when it's, what everything seems is pretty good right now, okay? So we're going to talk about jobs, we're going to talk about, what the unemployment rates are and all that type of stuff. We're going to talk about overall economic confidence out there. We're going to talk about GDP growth, where that was at prior to the recession versus where it's at now. We're going to talk about household incomes, household debt. We're going to talk about what the stock market was doing, what levels they were at, corporate profits. We're going to talk about that, U.S. median home prices. We're going to talk about the overall mindset that an average person had out there in the economy. And then we're going to talk about innovations that have happened since that time, guys. So a lot to get into this video here, a lot to talk about, all right? So I hope you enjoy this. Hit a thumbs up if you enjoy this, guys. So first category is jobs. What was the overall employment like out there, okay? So I would describe the overall employment, looking at the statistics, as a very good situation in 2005 through 2007, okay? It was very good. Low unemployment rate. Most people that wanted a job could get a job of some kind out there. A lot of construction jobs, things like that, okay? It was not a hard time to get a job. And I would call 2018, I would call it very good, okay? I would call it just one step above. Not only do we have very low unemployment rate right now, but we have a massive amount of unfilled jobs out there. We're talking millions of unfilled jobs right now that are waiting for people to go ahead and fill those jobs. But they're kind of, it's a good and a bad thing, okay? One, that means a lot of companies are looking for more employees, but the bad part of that is a lot of those jobs are technical jobs that you need specific skills in order to do, okay? And a lot of those jobs are good paying jobs too, $50,000 a year, $70,000 a year, $90,000 a year type jobs, but a lot of those jobs you need a technical skill. You don't necessarily need a college degree, but you do need certain technical skills for some of these jobs out there that are available, okay? So I would describe the overall jobs outlook, like if you want a job right now, you should be able to get a job no problem, okay? You're making $10 an hour, $12 an hour, or something like that. And if you want to take it up to the next level, you can definitely do that, but you need some technical skills. You might have to go to technical schooling for a year or two or something like that to get one of those jobs that pays $50,000, $70,000, $90,000 a year. Truck drivers, for instance, that's an industry that has a massive shortage in drivers right now, and we're talking about an average truck driver can make $50,000, $70,000, $90,000 a year. That's a massive unfilled job opportunity right now. So jobs prior to the recession, good situation, even better right now, okay? Economic confidence, okay? I would describe it in that period as very high, okay? We describe it as very high. There was a lot of economic confidence prior to the Great Recession. There were not a lot of people talking down about the economy prior to that period. Most people felt like very good about themselves, almost too good about themselves, and almost too good about their jobs, and almost too good about the overall economy, right? And that led a lot of people into some very bad things. I would describe it as, I would just describe it as good right now, okay? Economic confidence, despite a lot of the numbers you see out there, I still see a lot of people talking about not having as much confidence in the economy as prior to the Great Recession, okay? And part of that we'll circle back to, and I'll explain the reasoning the reasoning I believe is behind that. But overall economic confidence, I would describe it as good. Most people are positive about the economy right now, but you definitely still have some that are not as big of believers in the economy right now, okay? GDP growth at that time was very good. It was solid, okay? And GDP growth right now is also very good, okay? Both those times the GDP was growing quite nicely. Right now we're at some of the highest GDP growth we've had in quite a while. They're talking about maybe we could hit a 5% number in the back of this year, which we haven't hit a 5% GDP growth number in a long time, guys. It's been a long time in this country since we hit that type of number, okay? We were over 4% in this latest quarter, which is very high, okay? So those are good numbers. And the U.S. economy is so big that anytime you can really grow at a 2% plus clip, it is still a very dramatic number, okay? Now, once you get to a 3 or 4% clip, that's really, you know, insane for how big our economy is to be able to grow at those type of rates. It's no different than a massive company. A massive company gets so big, and then all they have to do is put up, you know, 5% growth or whatever that is, and they can still look like they're growing massively just because they're so big. It's called the law of large numbers, all right? So that's GDP growth. Household incomes is very, very interesting, okay? So household incomes peaked in 1999, and it took all the way until 2007 until we got back to the 1999 level of household incomes, average household income out there. Very interesting period. It was down all the way through 2006. 2007 is when it peaked, okay? And then 2008, the massive recession comes. Now, what's also very interesting about this is 2007, household incomes peaked, okay? 2016, all the way to 2016, they had been down. And in 2017, they finally got back to that peak, okay? 2018 is possibly going to be a little better than 2017. So we noticed that there were definitely, you know, a record period and then followed by tons of years that were down. And a record period followed by tons of years that were down, and finally we're back up to record levels in the household income. So that is a very interesting statistic I found there, because you would think that just on average, like the, you know, household incomes would go up and up and up, when really that's not the case, guys. They've been down quite substantially for a long time, and then all of a sudden they get back to you know, record levels and whatnot. It should be very interesting to see what the 2018 numbers end up coming in at, all right? Household debt. Household debt prior to the recession was at all-time highs, okay? ATH, all-time highs. Household debt right now in 2018 is, guess what? At all-time highs, okay? Definitely not a good thing you want to see out there. You never want to see household debts at all-time highs. And prior to the Great Recession, we were at all-time highs. And right now, we are once again at all-time highs, all right? Stock market. The stock market hit its all-time high in 2007. Okay, it reached an all-time high, the highest it had ever been in history. It was, I think it topped out in 2007 at 14,200, if I'm not mistaken, somewhere around there. All right. And the stock market in 2018 has hit an all-time high. It is technically not at that all-time high right now. We're a little ways off of that all-time high. But it has hit its all-time high, the highest it's ever been here in 2018. All right. Let's talk about corporate profits. Corporate profits were at all-time highs as well prior to the recession, okay? The highest they had ever been, and right now, also all-time highs. Now, to be fair on this category, okay, as far as corporate profits go, they've been at all-time highs for 5 straight years, okay? 5 straight years corporate profits have been at all-time highs. So for this category, you could say, well, 2013, they were at all-time highs. 2014, they were at all-time highs. 2015, they were at all-time highs. You would go year by year and say, well, they were always at all-time highs for many years in a row, okay? But needless to say, right now, we're at an unbelievable era of profitability for big corporations out there, all right? U.S. median home price. Another category that is an all-time high, okay? It was an all-time high rate prior to the recession, all right? It had reached its highest level ever. It was crazy, you know, from 2001 to 2007, the amount of appreciation in most home prices was unreal. And currently, we're also at an all-time high in the average U.S. median home price out there, right? So this is kind of a negative situation, or at least it looks like a negative situation when you look at this. Household debt, all-time highs. Stock market was at all-time highs. Corporate profits were all-time highs. U.S. median home prices, all-time highs. You're going to see a lot of correlation in between what was going on right prior to the recession versus now, all right? Now, I think some major differences come in here at the end in these last two categories, all right? This last category is called overall mindset, okay? What the average person was thinking out there. What we had prior to the recession, we had people with no fear. Most people had absolutely no fear in their body. Why? Because they had never been through anything really realistically in their lifetime, or most people hadn't in such a long time, all right? Prior to that period, we had a good economy or a decent economy for a long time, okay? Go all throughout the 90s, it was like a solid economy, and sometimes it was a really good economy in the 90s. Go throughout almost all the 2000s. Yes, we had the dot-com bubble in 99 into 2000, but that affected a very small amount of people, okay? That affected a very small amount of people, the dot-com bubble, all right? For the masses, it didn't really hit them, all right? So there was really no fear in the economy because it had been so good or decent for so long that people were like, what do I have to fear? You have to really go back to the 80s or 70s. You have to really go back to the 70s to really find a really bad economic situation, or maybe the crash of 1987 that happened in the stock market when it went down like 22% in a day. It was such a long time before that, guys, that people had no fear out there, okay? The difference is right now I still see a lot of what I call PTSD in the average person out there, okay? Because the Great Recession was so recent, it is still on the top of people's mind. It almost amazes me. It was like a decade ago, but it is still on the top of people's mind. And I think it's because we had such a slow recovery out of it. When we went into it in 2008, it really was throughout 2009. And 2010 and 2011 were really bad years economically. Like there were not a lot of good jobs out there. Most people were not feeling good about themselves. 2012, we started to turn, and then things started to get to going again. And it was like, oh, the United States is back, okay? But, needless to say, a lot of people still have what I call PTSD when it comes to the economy right now, where they are really scared that we're going to go back down that route. When they are like, it's on the front of their mind, like, oh my gosh, we could have another big economic collapse or something like that. I'm seeing it from a lot of people out there. It's just, it happens. And I think it's actually a good thing. I think it's healthy, okay? I think when you have no fear, I think you can lead into too much craziness, okay? With everybody being too bullish at a time. I love a certain amount of people that are bullish. I love a certain amount of people that are bearish. And I love a certain amount of people that are kind of in the middle. And I feel like we definitely have that in the economy right now. I think when everybody's just bullish and talking good, I think that's not good. I think when everybody's talking bearish, I think that does also no good. I think when you have a level of kind of, a certain amount of people over here and over here, I think it's very healthy. And I feel like that's what we have right now. So that's a really big difference, okay? Because these people had no fear. They were willing to do anything to, kind of level up, I guess you can say, okay? And then innovations. I would call this kind of a dark period in innovations, all right? A dark period. This was not a period of substantial innovations when you really look at it, all right? But what you've looked at, since we came out of the Great Recession, you're going to see massive innovation change, okay? You're going to see massive innovation change. When you think about how the economy's been changed, you think about the smartphone, right? You think about, how everybody has smartphones now. Everybody's connected to the internet. Everybody's the mobile economy, okay? When you think about social media and the way that's changed businesses, I'm talking business to business. I'm talking business to consumer. I'm talking consumer to consumer. It's amazing, guys, the things you have done. For instance, prior to the Great Recession, if I wanted to reach a 43-year-old that lived in Hoboken, New Jersey, all right, and, she happens to love German Shepherds, there was almost no way I could run an ad to her somehow realistically, and especially for a cost-effective manner. Now I could do that in a matter of 3 minutes on Instagram or Facebook or some type of platform, okay? I could specifically target straight to her and sell my German Shepherd mug over here that I want to sell her, okay? Those type of innovations have really changed the economy. When you think about the way social media has changed, the mobile economy, all these type of things, artificial intelligence, it's been a lot of major changes coming out of that Great Recession. We're talking massive changes. Prior to the Great Recession, there was not a lot of innovation out there, guys. I would say in tech, it was almost dead. Prior to the Great Recession, there was no such thing as smartphones. There was no such thing as a mobile economy. There was no such thing as social media. All that stuff really started to come after the Great Recession and came in a massive way. And it has fundamentally changed the overall markets, all right? So when I look at this, when I look at what was going on prior to the Great Recession, when I look at what's going on today, I see a lot of similarities, okay? I see a lot of similarities, and that definitely should give anybody some worry out there. However, I also see some differences, all right? So I don't think you can really go out there and say, well, just because this and this, we're going to have a crash, okay? And I also don't think you can say, well, just because you have this and this, it doesn't mean we can't have a crash, all right? But the way I look at this is there are definitely some similarities, and when you're on a high elevated level, it gets scary, okay? It's like the higher up the mountain you get, and the further you look down, it gets scary, right? That's just how it is, whether you're looking at the stock market or jobs or anything like that. The higher you get up that mountain, the scarier it gets when you look down and it's like, whoa, I'm really far from the bottom now, okay? And I think that scares a lot of people. So what would have to happen if we're going to get a massive economic collapse or Great Recession or financial collapse, whatever you want to call it, okay? We're going to need the actual overall economy to start to weaken in a major way, because jobs, corporate profits, all that type of stuff, that's what really drives the overall economy, all right? An average person going to work and getting their 40 hours a week or whatever and making their income. That is what really drives the economy. If we start to see weakness there for whatever reason, could it be the tariffs? We'll have to see. We haven't seen much of a negative effect so far on far as company profits or anything from the tariffs. Maybe this quarter we start to see some weakness in a lot of companies. We're going to have to see. Or maybe next year we see bigger weakness. We're going to have to see. We know, none of us know yet how much that will weaken or not weaken companies out there. If China's weakening in a major way, how bad is that going to hurt us? Is it going to be a little bit or a lot bit, okay? So we got to kind of wait and see kind of what these next 2 quarters, in my opinion, from companies are going to be very important to hear what their guidance is going into 2019. Hear what their numbers are doing, okay? Hear about their confidence levels. Are they planning on cutting a lot of jobs or adding more jobs? Those are the type of things that are going to be very important, because these big companies, they're really what, and not just big companies, mid-sized companies, they're what drives so many of the jobs in the United States of America, that if they start, laying off people left and right, it's almost like dominoes falling the wrong way, right? However, when they're adding more and more jobs, that's great. Wages go up, more and more people are employed who want to actually have a job and things like that, and it's a good thing for the economy. So we're just going to have to see. We're going to have to wait on, overall things, but there are definitely some similarities out there, guys. So I hope you enjoyed this today. I hope you learned a lot from it. I spent the last 48 hours just kind of going through this. I want to know your guys' opinion down there in that comment section. I would love to hear from you guys. My Instagram, Snapchat, courses, all that type of stuff is linked down there in the description. Thank you for watching and have a great day.